Welcome to HSBC Global Viewpoint, the podcast series that brings together business leaders and industry experts to explore the latest global insights, trends, and opportunities. Make sure you're subscribed to stay up to date with new episodes. Thanks for listening, and now on to today's show.
This podcast was recorded for publication on the 1st of May 2025 by HSBC Global Research. All the disclosures and disclaimers associated with it must be viewed on the link attached to your media player. And don't forget to follow us. Just search for the Macro Brief wherever you get your podcasts.
Hello, I'm Piers Butler and welcome to the Macro Brief, our weekly look at the issues driving financial markets across the globe. Now, here in the UK, there is a long list of problems facing the economy. Growth remains stagnant, inflation is stubbornly elevated, borrowing is high, and UK bond yields are above their US and German peers. Add on to that the prospects of US tariffs, and the outlook appears to be pretty gloomy. On today's podcast, we're assessing these issues and finding out if there's any light at the end of the tunnel. To do that, I'm joined in the studio by Liz Martins, Senior UK Economist. Liz, welcome back to the podcast.
Well, thank you very much.
So the last time we had you on the podcast, which was back in February, I likened the state of the UK economy to the weather, which at that point was pretty gloomy. And the weather has definitely improved, but the perception is that the UK economy hasn't really, and we've just had some data on the latest figures for borrowing, which seem to have deteriorated. So is it all gloomy?
Well, I think on the public finances, it really is mainly gloomy. So, of course, we've just had the data that suggests that full year borrowing for the fiscal year that ended in March was £15 billion over what the Office of Budget Responsibility had forecast just 4 weeks earlier. So it's a huge overshoot, really, in a very short space of time. And the worry, of course, is that excessive borrowing carries on through the current fiscal year, and that sliver of headroom that Rachel Reeves left herself in the spring statement ends up getting wiped out, which means more fiscal tightening coming in the autumn, whether that's spending cuts or tax rises, neither of which is great for the economy.
One of the bits of good news is potentially the outlook for UK interest rates. And in fact, as a team, we've been anticipating more rate cuts than the market. Certainly, a few months ago. Has the market moved closer to our view that the Bank of England is likely to do more rate cuts this year?
Yeah, it absolutely has. So just before 2nd of April and the tariff announcement, the market was expecting only 2 rate cuts from the Bank of England from here to 4%, stabilising around there. Since then, it has moved towards our view, which I should say sees bank rate falling by 25 basis points per quarter until we get to 3% in September of 2026. So that's our view. The market has moved towards there. I think it now has a terminal rate more in around 3.3, 3.4%. So it's moved much closer to what we think. And what's interesting is that it fell to kind of 3.5% in the wake of that tariff announcement. And some of that tariff policy has been softened and rowed back, and other markets have recovered, but that BOE pricing has stayed. So yeah, the market has moved towards us.
And talking about tariffs, how difficult a situation is that for the UK? I mean, it's a difficult question in a way because we don't really know where we're going to end up. But let's assume that 10% tariffs are imposed on the UK. How bad would that be?
Well, it's obviously not great. It's the 10% baseline. It's the 25% on cars. You know, these things really do matter for the companies and the sectors that are affected. But for the UK as a whole, we were never going to be the biggest victim of this thing. So, 40% of our exports are goods. Of that, 15% go to the US. So this was never going to be as seismic as it is for kind of Mexico, Canada, China, those kind of countries which really depend on exporting to the US. Of course, there are indirect effects if the global economy slows sharply. And in fact, if we look at the PMI surveys for April, it was the service sector that saw the biggest drop in confidence and activity, not the manufacturing sector. But even so, I think, we are somewhat protected relative to the big manufacturing exporting economies.
Now, you're out on the road a lot. You talk to a lot of clients, a lot of corporates. What's the mood out there? What are they worried about?
Well, look, sad to say, we're still talking about the October budget, and it's been at least 6 months since that was delivered. But the increase in tax on national insurance contributions, so the employer national insurance contributions, has been a really big deal for the companies that we talk to. It comes up all the time, and companies have different combinations of ways of dealing with it, whether it's lower headcount or lower bonuses or lower pay rise, and some of them, of course, will pass some of this higher cost on as inflation. We think that will be a temporary spike rather than a spiral, but some of it will, and we'll see that in possibly in the so-called awful April inflation numbers. But very few are unaffected by this. So it does feel like it was a really big deal. And it was the latest in a series of shocks, of course, because UK businesses have been through COVID and Brexit and the cost of living and interest rates and the mini budget and, now the tax rises and now the tariffs. So it's one thing after another for businesses. And, all I would say about it is we continue to be amazed and impressed at how resilient they are. And, you roll with the punches and you keep on going and dealing with all the shocks. And I'm sure they will continue to do so.
Yes, that resiliency is really quite impressive, isn't it?
It is impressive. And actually, to that point, to end our conversation on a high, we were starting to see some better signs in the economic data just before the tariffs, actually. So we saw a really good number for February GDP growth, not all of which can be attributed to pre-tariff front loading. And we saw some recovery in the retail sales data as well. So, even with all these headwinds, there was some signs of life coming through. Now, whether that withstands the tariff shock, we will have to wait and see. But as you say, resiliency, absolutely key, and something that continues to impress us.
And just to finish on, in terms of key dates and announcements, what are the next things that we should be focusing on?
Well, the next big thing is Thursday, 8th of May, which will be the Bank of England meeting, at which we are expecting a fourth interest rate cut. So we'll see the 25 basis points down to 4.25%. The market is pricing in a small possibility that they could cut by even more, maybe by 50 basis points. Don't think that will happen, but you never know. And the Bank of England may want to open up and just loosen up the language a little bit to suggest that actually, if we need to take a slightly more activist stance here, we stand ready to do so. So we'll see whether they go as far as saying that. But certainly, as we discussed earlier, the market has moved and expecting a more dovish Bank of England going forward.
Let's hope so. But for now, thank you very much for joining us, Liz.
Thank you.
The HSBC Global Research app opens a world of insight and investment ideas whenever and wherever you want. The app showcases the latest views from our award-winning team of economists, strategists and analysts. A powerful search function lets you dive into our full research catalogue covering economics, FX, fixed income and equities, as well as data science and our 9 key investment themes. Get alerts to our top research, videos and podcasts. If you're a Global Research client, download the app now.
Before we go, a date for your diary. We're hosting our next Live Insights event on Wednesday, the 28th of May. And this time, the focus is on all things Asia. I'll be putting your questions to the co-hosts of our sister podcast, Under the Banyan Tree. That's Fred Newman, our Chief Asia Economist, and Harold van der Linde, Head of Asia Equity Strategy. The event is open to everyone. You don't need to be an HSBC client, and it promises to be an interesting and entertaining conversation. For details on how to sign up, email askresearch@hsbc.com or head to LinkedIn and search for #HSBCResearch. And finally, a reminder that HSBC clients can keep up to date on our latest research by downloading our app from Apple's App Store or Google Play. And don't forget to subscribe to the Macro Brief wherever you get your podcasts. So that's all from us this week. Thanks for listening, and we'll be back next week.
Thank you for joining us at HSBC Global Viewpoint. We hope you enjoyed the discussion. Make sure you're subscribed to stay up to date with new episodes.